So on Wednesday we gapped up and we left this poor high from the day before on Tuesday. And my kind of premise for the whole trade was that okay, so we had this very large gap, we gapped up after having a big rejection from Monday, and now we were kind of well back within this previous range consolidation, and now with this poor high in play, I felt there was a very good chance that we at least tested above the 75 and a halves. And my whole thinking was behind it. Okay, if we should at least test above here. But if we're then going to trend, we should be making a low, you know, somewhere in the futures session, in the first hour of cash. Sorry, and yeah, that was kind of my premise. So I had a kind of bullish bias coming into the session for at least a test above this high, and then it was all about kind of using the lower time frame, which I'll show you, which kind of reconfirmed my initial view of how I wanted to position, and this is kind of what I'm going to talk about today. Having a plan which you can then use to kind of play into price action, make more sense of price action, and you can kind of be a lot more aggressive and take and kind of scale out of size with the kind of overall riding picture of this market going in a certain direction. So similar to the thing what I was saying, we had a strong gap up, but we opened in the middle of this very tight consolidation. And if you're watching from this day on Tuesday, this is kind of a really, it was obviously showed poorly traded on the profile, but in terms of the way it traded up here, I don't think it was very well auctioned. So for me, when we opened in the middle of this range, you kind of were skewed in your risks. How you're going to position here on the immediate gap was quite hard, but for me it was kind of really good risk reward to kind of pick up passively into the bottom of this range in anticipation for the kind of full kind of rotation of the block. So I mean my kind of view was, okay, I was basically looking for reactions at either side of this extremes. And that was kind of how I wanted to play. I mean, we were going to potentially trend through here and kind of hold initiative, or were we going to, kind of do the similar thing we were doing recently in the Spurs? We have these big gaps and we kind of fade off, big gaps, fade off. So this was my premise here. So what I'm going to kind of show you here is how I used the ladder predominantly. Well, I use the footprint a lot in how I like to execute this trade, and it's kind of an execution method I use a lot for positional trades. And also kind of lower time frames to trade like scalps. So if I just bring up my ladder now from this day, actually, and let me show you quickly just what I debrief, because it shows you, if you guys can see clearly, I'm not sure, but basically from kind of what I reviewed from that day was on this gap here, and as you kind of see, big gap up, opening in the middle of the range. I wanted to pick it up passively on the underside here, but what I kind of noted was the high volume into the low, then hold above the trap initiative, and this is a trade I really like to take. And on the footprint, unfortunately I can't show you, but I have it set, and everyone will have different settings for imbalances and volume, etc. So for me, what I like to see is how I talk about a lot is where the volume is traded and how the market reloads. So for me, I kind of note down, on the second stab lower was a liquidity hunt, and the delta was more positive on that way down. So what I'm going to kind of show you is the second stab lower. I was already long into this move, and then kind of how I pick up a lot more aggressively on the second time when I get confirmation from the ladder and the footprint together. So I'll kind of run you through how I digest the information. So, like I said, for me it was really important. These kind of, if you haven't got a footprint, for me we had already bid up, and now we had this second pullback down, if you can imagine that. And for me, there was a lot of volume traded at 63.5, which you can see without footprint. But on this second leg lower, we had a lot of selling. We had a lot of initiative selling into the bid, but the delta was still going up on the way down. So there was bigger sell clips going through at the time, but the delta wasn't really going down. It was still staying positive. So for me, this kind of pinch point was these 63.5. So the whole focus for me was, okay, how, the 62 and a quarters was the low off the block, which I was looking to kind of pick up passively into, as you can kind of see why I'm already long. And you can potentially look to pick up again on the second stab lower, but instead of assuming the market's going to follow out your plan, for me, what I like to do, especially when it's so clear as to the parameters of the market, was let the market show me it wanted to do what I thought it was going to do. So for me, as you can kind of see, the volume into this low starting to pick up, into the bid, like a lot more volume clipping the bid. And what I want you to focus on is how we then, once we get back above the 63.5s, when the market kind of holds firm bid, how I then try and I kind of have a very tight, precise area for entry and how I want to execute. So again, as you can kind of see, if you had your footprint, you'd see this was kind of, there was a lot of like I said, there's a lot of selling balances into the bid, so a lot more selling going into the bid than people lifting the offer at this moment in time. And once the market as it kind of starts to stall, you can kind of have that impetus to think, okay, right, I do think the market now may, if anything gets, if we get back above that little volume node here, where the kind of main transaction was on the footprint, with all this new fresh initiative coming in now, back above here, I do really like the road. I want to be long. I want to be positioned long. I want to be, positioning on the underside of this block. And any trap positioning here, I think, really, you can take advantage of. And this is a trade the S&P loves to do, or like a, a price action pattern the S&P loves to do, and you see frequently, on all areas of the market. So just notice for how I'm waiting for the market to kind of hold bid above these 63.5s, and once I do, you just see how quickly I want to kind of scale in. I'm not too worried about how the market's interacting here. If, like I said, the last few days we've had these kind of gap ups and fall back into the previous day's range, so I'm a little bit worried that I don't want to be picking up too aggressively until the market shows me it wants to do something. So like I say, the market is starting to stall. All I know is that there's been a lot of selling into here, and once the market starts to stall, I'm kind of aware as to, okay, right, the minute we start to get back above that initiative, that's where I'm going to kind of put my size on, and it also gives you the opportunity to scalp out. You can kind of scalp for the long side. When you have your your bias or your kind of hypothesis, you can scalp out of a bigger clip. Just with the nature of the volatility of the SPY, there's very small time frame plays you can kind of take advantage of when you see these plays. So as you see, we start to go bid back above, kind of hold a bid again back inside the block. 63.5 is that area of volume on the footprint. This kind of, you have all this trap selling all the way down to 61.75, 61.5. So for me, the minute the market goes bid, so from that, like I say, it's like the way the market reloads I'm interested in. It's not necessarily what's trading at market. Okay, yes, here I was paying attention to what was trading in the market, but now the market's kind of holding this bid. The minute it was holding the reloads firm above 63.5, I just want to get in terms of my positioning, and kind of like I want to get all my clips in above these 63.5. I don't really mind paying up above 63.5 as long as my stop is going to be just below here, 62.5, 62.75. So basically, as you can kind of see, I'm just basically wanting to lift anything within this kind of handle range at this point, and now I have a very tight stop. If this is the case and this is about to play out as expected, all this trap positioning in here is going to have to kind of unwind, and this is also paying up. This is also playing into your plan of how you want to position for the day. So you have that kind of that target of the poor high from the previous day. And now the market's kind of giving you this price action confirmation, which you can play off. And this in itself is a really nice price action pattern you can just play on its own. So notice how we reload 63.75, constantly reloading for 63.75. Very tight stop, 62.75. I'd puke half straight away if we was to start to trade below here. Just purely because the consensus for me and how I feel this should trade, it shouldn't go offered below here. And the minute it does, I just want to puke and then reevaluate. Whereas now, I feel very confident in how the market's reacted off the 63.5 after going a bit above it. So for me now, this is how I can kind of like to say feed some size out of my position. And yeah, this was just basically a very small kind of small snippet of price action, which I think is really important, and you see it all the time in the market. And I mean, next time hopefully I'll kind of show you with my footprint. But basically, it's just what I mean. I always talk about. I like to see how the market reloads, and I like to see. I wanted to see where the volume's trading. I don't necessarily pay too much attention to what's going on in the market because it's moving so fast, it's trading so quickly. But for me, understanding where the volume was, taking place, so the transaction was taking place, was on the underside of this block. So if I just bring up my charts again, the trading was on the underside of this block. So I mean, the positioning in here. So anyone selling aggressively into the underside here, this kind of played into my thesis of trading at this high, and then whether it was going to trend or not was a whole other question. So I could kind of pick up aggressively here with confirmation of the price action, and then scale out as we popped up, and then let a small core position run for the challenge of the highs. I mean, if you're really convicted on the trade, you can kind of you can just let the whole position run. But for me, I was kind of in two minds as to, right, are we going to fall back into here? The high conviction trade for me was when we saw the price action really shift, at the bottom of this block. This was my area of entry. I got a really good, strong, price confirmation, of the auction confirmation of what was going on, and then I can kind of size up with, a handle's risk and be, really confident that, this should, test up at least towards 75 and three quarters. You should kind of at least look to revisit it. But yeah, I mean, this is kind of, I thought it was important just to kind of explain my whole understanding as to why I was doing what I was doing, because it wasn't just looking for price action. It wasn't just an idea. It was kind of a whole number of things which kind of made sense to me at the time, and therefore I was kind of using them all to play into. It gave me conviction to scalp the market quite aggressively, and I'll just kind of let it play out quickly now. But it gave me conviction to scout the market quite aggressively. And this is just a price action pattern that Spoo loves to do. It's all about where the volume's traded and then how the market then kind of holds or doesn't hold above the volume traded, sort of thing. And don't get me wrong, when this trade doesn't work, you need to be very quickly to get out. You need to be very quick to pay up, because the nature of it is once the market starts to reload above or below that area, it can kind of you can kind of get away from you quite quickly. This market is so fast paced in how it trades, and it's predominantly algorithms or whatever like that. So you need to be very disciplined in taking these losers and winners as well, just because there's lots of volatility and it can kind of come back at you very quickly. So it's all about focusing on areas of volume where it's traded and just kind of trusting your zone. So the 63.5, I've done well here and given myself a really good price location relative to my stop. Literally my stop can be below 63.5. I mean, if you were to do this really well, you could have been positioning just below here in anticipation for this to happen. I mean, that's a whole nother trade in itself. But once you kind of see these little price action things play out, always in accordance to with a plan or structure, there's so much opportunity to kind of scalp aggressively, run a core position, but scalp out of size. And this is how you can kind of you can build really nice days trading the S&P just like this, even when it's not volatile. You can kind of still play the smaller time frame volatility when you see price action kind of fall into place as well. So I thought that was something just really important to look at, and kind of combine the footprint as well. So if you don't have a footprint, you can kind of just literally use the volume profile on the ladder. But when you see how the market's kind of trading, what sellers versus buyers, on a certain rotation into a certain area, the minute they're kind of trapped above or below the the current trading price, then for me that's a big signal as to the direction of the market should want to go. And if that kind of rejects it, then okay, then that's you pay a relatively small price for that kind of thing. So